Hi everyone, my name's Jeroen from the Clapham property blog, and today I'm going to tell you about bridging finance. Right, well, you may have heard the term thrown around, bridging finance, but what is it actually? I, much like other investors, buy property to refurbish and to add value. Now, the best thing about refurbishing a property is that you actually add value. Now, what it is, when you've added this value, you want to take that money out of the property, you want to reinvest your profits, most probably. So, how do you do that? Well, you go to your lender and you say, well, I want to borrow some more money. Now, the problem is that when you buy with a normal mortgage, the mortgage company will often dictate that you can't borrow any more money on the same property, nor can you refinance it to another lender within 6 months. So you're stuck. You've got to wait, really. And lenders don't really like it when you hop from one product to the other in 6 months' time. That's where bridging finance comes into play. Now, bridging finance houses, they are like the loan sharks of the lending world. Now, they're not all bad. They just charge a little bit more money because they know that it's just for short term. Like when you go to a short term loan on the high street, they will charge you more interest. A typical bridging loan will set you back about 1% a month, give or take, and there's always an entry fee as well, normally 2%. The very expensive ones, or if you don't have a lot of experience with this sort of thing, they may charge you an exit fee as well of 1%. So the interest is for a predetermined time. You can either pay the interest as you go, which is just monthly payments. They can also ask that you paid in advance, so they take it off the advance that you get on completion of the purchase. You can also ask for it to be rolled up at the end, so you pay them when you repay the loan. The latter option is more expensive though. So why would you take out bridging finance? Well, say for example, if you buy property and it's worth £300,000, you're able to secure that property like a cash buyer, because bridging finance lenders, they are a lot quicker, they have a lot less checks to do than the normal mortgage companies. So you're able to negotiate a better price in the start. Secondly, you will refurbish the property, you will add value to that property. Say for example, you raise the property's value to 400 and you go to a regular lender on the high street like NatWest or Barclays or HSBC or whatever, you take out 75% loan to value. You can then borrow £300,000 from the normal bank, repay your bridging lender and recoup your costs of your refurbishment and hopefully your stamp duty as well. It doesn't work out in London really that you're able to have no money left in the deal, but if you minimize the amount of property or minimize the amount of money that you've got left in the property, that means that you're able to roll on all your money into the next project, or at least as much as possible. So that's why bridging finance is very important for properties where you're adding value. If you're just looking to buy it and leave it alone and buy to let for a long term, then obviously a buy to let mortgage is probably more suitable. But if you find a property which is a little bit dilapidated and you need to add value to it in order to bring it up to scratch for rental purposes and you want to reinvest, then bridging finance is for you. So I've used bridging finance to accelerate my property portfolio very successfully. So if you'd like an introduction to some bridging companies that I know and use, then by all means get in touch with me via the blog, www.claphampropertyblog.com. Or drop by the Clapham Property Meet. We're in Clapham on the last Tuesday of every month. Look forward to seeing you there.